Hello everyone and welcome to our Market Watch video after Federal Reserve meeting, decisions that they had, and now we are going to see what exactly they decided, what we saw in the dot plots and how these data and these expectations and the press conference can affect the markets. Let's start with the statement. As you know, the Federal Reserve already cut the rates by 25 basis points. That was what widely expected in the market, with more than 80% chance, or 78% chance almost, around 80% chance for the rates cut. That happened, what was expected, and now there is almost no doubt that, there was almost no doubt that the Fed is going to cut the rates. But the thing is that the market was warning about the several things, about the members that you're voting against of this decision, and also about the dot plots and the future polls press conference. Let's talk about the statement. The statement showed that the 25 basis point happened, but two members they voted for not cutting the rate, for holding the rate at the current situation, at the current rates, while the one member, Mr. Mario, if I don't mistake, Miran, sorry, Mr. Miran, who voted for 50 basis point rate cut. So three members, they vote for 25, two members, three members generally, they were against of this decision. That was one of the rare meetings that we had very just like different ideas and talks. When I'm talking about the different ideas and talks, it's not just about this, these three person. Looking at the dot plots, we will talk about the dot plots exactly in more detail. But looking at the dot plots, and when you are looking at the interest rate expectations, you can see interest rate expectations for this year. It was 6 votes for holding about these rates, and for next year to cut the 25 basis point. Already, we have four members that they think that they should. They think that. Sorry, 12 members. They think that the interest rate it should be cut by 25 basis point, and 4% they are thinking that the inflation interest rate shouldn't be cut next year. When looking at these numbers and these data, we can say that okay, now there is more idea about, the more differences and more we can say an agreements in the market, and different ideas and thoughts about the policies. So that shows that the market now counting on now the market is counting on a little bit more hawkish policies and hawkish reactions from central banks, central bank in United States. Looking at the more detailed data, looking here, here we can see that the Federal Reserve members, what they show us in dot plots. Change in a real GDP for this year increased from 1.6% that they were expecting in the September meeting to 1.7%, which they are expecting now. That changed for 2025, and for 2026, it was more interesting. It increased from 1.8% GDP development to 2.3%, half. The 0.5% or half percentage points increased the GDP expectations. For 2027 also, it increased from 1.9 to 2%, and for 28 increased from 1.8 to 1.9%. Generally, what we can see here, the Fed members, they're expecting to see the better economic growth in the United States for this year, next year, and next 2 years, and for long run. Generally, they are positive about the economic growth, while the unemployment rate stayed unchanged at 4.5% for this year, 4.4% for next year. But for 2027, it's lowered from 4.3% to 4.2%, in the line with the long run expectations, which means even thought the 4.4% currently and 4.5% even unemployment rate is not such a high level. Generally that's expected level, and now we can say, okay, that's what we can see here in the market. Counting on the labor market also should be fine. While the inflation expectation, yes, they slightly eased from 3.3% to 2.9% for personal spending. For personal inflation, PC price index, personal inflation index. But for the core personal inflation index, core PC price index, lowered from 3.1% to 3%, generally from 3% to 2.9%. headline and core from 3.1 to 3%. Generally, what we can see here, even 2.9 and 3%, even slightly is, but they are still high. Even for the next year, the expectations is around 2.5 and 2.4% for core and headline PCs. What that means? That means that the inflation is still high. Even thought for the next year, they're expecting to stay above the Fed target levels, while the GDP is growing better, while the unemployment slightly is better. I mean, this market, labor market is getting better. Generally, what we can see here, the economy is moving much better. Inflation expectation is not so low. At the same time, that's why the Fed members, they believe that for the next year they should have only one time rates cut by 25 basis point. That's what we can see in with the 3.4% market expectations. So generally, what we can see here that the Fed members expecting only 25 basis point rates cut. I mean, that means only one rate cut during 2026, which can most probably happen in the second half of the year after the new Fed chair, most probably Mr. Hassett, can take over the office. That's what's market expecting right now. That's what the Fed members also expecting right now. That's what we can say, that the hawkish decision and hawkish outlook among the Fed members and policymakers. That's why the market reaction also was interesting. Looking at the chart, starting with the week's chart, let me share my chart here. Looking at the VIX chart, we can see the market just right after the meeting slightly eased, but after that, the market the market members, they came to adjust to understand his data. We can see here that the risk after falling to under 70 towards 16.4550, again increasing, and now we can see the market risk at 17.20, which means that now they are generally, I mean, really, they're talking about I mean, two different really ideas about the economy and the differences among the Fed members. This is exactly the same as we can see in economic growth. But I mean, we know that economic growth right now, we can say that right now economy is growing or recovering in a K-shape. The K-shape means with two speeds. Service sector and the manufacturing sector in two different ways. Anyhow, that's what happened in the Federal Reserve and the market risk. That's why we can see dollar index, which fell towards 98 point almost 15 last night, again increased slightly, but generally we are not expecting to see the dollar index so high, or we don't expect that so down. That's why around 98, 99, that's what we talked about. We were talking about that, and I told about that before the Fed meeting as well, that these levels are the levels that we're expecting to see the US dollar index around this area, not high, not down, but this area that will be fine. About the gold price, the XAUUSD, as mentioned before the meeting, the gold price is moving the sideways with the uptrend tendency, because the positive, I mean, whatever happened, I told you yesterday, whatever happened if they cut the rates, weaker dollar, the dovish decision or the dovish reaction, weaker USD, lower bonds, lower yields, higher gold price. If the hawkish policy, stronger USD, stronger bond yields, higher bond yields, but weaker stock market, and money moves again towards the safe haven as it's the gold. Anyhow, the gold market was positive in any scenario, and that can continue further. Same for the silver market as well. About the energy price, while the US inventory is full, and that could be positive for the oil, and the stock markets also increased right after the meeting. That was positive for the oil, and that's why we could see the oil increase slightly after the meeting with the Fed and inventory reports. But right after that, the stock markets realized the data a little bit more, looking at the more detailed data slightly east, and that happened. That's why we can say that again, the oil price slightly ease, and now we can see the oil price under $58, under 57, around $58 down. So generally, we can say this decision was negative for the oil and gas. That negative reaction can continue further. On the stock markets, as mentioned yesterday, the decision and the dot plots, they will be against of each other. That happened. The decision cutting the rate, the dot plots, and the talks generally was hawkish. The decision was dovish, so they're against of each other. They could come over each other, and somehow, the decision can come with this result that okay, nothing happened here. That's why the overall side movement with the slight downside tendency can continue further. Same for the stock market, same for the energy market. That can happen for the S&P 500, Nasdaq, and the Dow Jones, and all of them. That's what market expected. Now the cryptocurrency market, the Bitcoin, the same trend almost, which happens in the stock market with more dovish tendency. The following the stock market, especially the Nasdaq, but not that positively. Not that positive. It follows mostly the negative side of the Nasdaq than the positive side. But generally, looking at the data, when we're expecting a little bit hawkish decision in the Fed, we can say now is the time for the cryptocurrency also still to get the pressure continued, and that's why we can see that the USD index under $92,000 gain at $90,100. As long as it's under $92,000, that can be negative for the cryptocurrency, especially for the Bitcoin, and that can continue. The corridor above 92 until 97,000, that can be side movement. Any uptrend will start above $97,000. Don't forget about that. Several times we talked about this topic. Yep, that was what Fed decided and what was the market reaction and our expectation. Have a good time. Talk to you again later. Bye.